It's Saturday. It's Saturday, and it is still kind of chilly outside. Guess who's loving this weather? None other than me and some more people that I know that like the cold weather. Yes. Oh my goodness. Thank you for joining and tuning in. It has been 7 entire days since I have seen you all. I hope you all have had a phenomenal week. And guess what? If you didn't, it doesn't matter, right? Because you're not in that same space. Excuse me. You're not in that same space. You don't have to stay in that same space. So, no matter what you're going through, no matter what you're dealing with, it's okay to dwell on it, but don't stay in that space. Let it go. It shouldn't consume all of your time or live rent free in your head. Like, how does that look? Something or someone living rent free and you got to pay all the bills, right? Absolutely not. No, 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 no. So, as you know, I love to kick off the show with fun facts. Who don't like fun facts? And the show is Let's Talk Finance. So I know last week we talked about currency, the money, and the life span of currency, the dollar bill, the $5 bill, the $10 bill, the $20 bill. And, you know, some of them bills, life expectancy is longer than human life expectancy, right? So guess what? Today's fun fact, we're still talking about currency, but we're talking about coins. And the reason why I wanted to do this is because I was at a restaurant and they had a big old sign on their countertop that said, "We have a shortage of pennies. So if you do not need to pay by cash, please don't." Like, how do you have a shortage of change? I don't understand. So what did I do? Some research. And I didn't want to start here. I wanted to start all the way back from when it founded. So let's kick into these fun facts about coins, right? And what I found out, OMG, like I want to see the coins. Like, I want to hold them in my hand. Like, okay. So initially, there was a 2-cent coin and a 3-cent coin, which was called the U.S. coins. The U.S. Mint produced both the 2-cent and the 3-cent coins. Now, hear me out. The 2-cent coin at 1864, life expectancy started at 1864 through 1873, was the first U.S. coin to bear the motto, "In God We Trust." Like, I know you pay attention, you see that in courtrooms, on TV shows, and on money, but it's really on the penny. So to see that on the 2-cent, like, that was mind-boggling for a second. Now, the 3-cent coin, it was silver, right? And its life expectancy was from 1851 through 1873. It was copper, then nickel. It went nickel plated from 1865 to 1889, right? So it was primarily created to facilitate buying postage stamps that was at the time 3 cents. Can you imagine? Like, postage now is almost $1. And depending on what you shipping is more than that. So, like, if we could go back and get like 3-cent postage stamps, oh wow, that would be the luxury, I think. Especially if you want that sent out a lot of mail, right? Now, here's what happened. Before the nickel, which came to part in the US, it was silver. And it was a half of a dime, but they called it Disney, DISME. For its first 5 cents, it was formed from 1794 to 1873. So you see how these coins got more life expectancy than us? Or is it just me? Now, the nickel came from new metal content. Even though it was mostly copper, they incorporated new metal. just to give it that shine and that different color. Now, here's what I found so fascinating about it. Not just the nickel, but the currency period, coins. Counterfeiting used to be a capital offense. It's still against the law now, but it's not held at a capital offense, where back in the day it was a capital offense. And here was the charge. The death penalty was a measure to ensure the integrity of the nation's currency from within the mint itself, treating the breach of public trust as a capital offense. So what they were saying is that we have so much love and loyalty that we're going to punish you for taking something or making use of something and counterfeiting it, and it wasn't even approved. And I get it. I respect that. Like, yes, go to jail, do your time. Now, there is a coinage act that happened that started in 1792, and it was for officers and employees of the U.S. Mint who were found guilty of debasing gold and silver coins or embezzling. Can you believe these people working at the mint and they stealing at the mint? Don't you know that there's ways to find out if you're stealing? Like, why would you put yourself into that? But that goes to show you that what happened before is still happening. Time brings about a change. Now, many coins are worth millions. A specific 1794 florin hair dollar, considered the first U.S. silver dollar, sold at an auction in January of 2023 for $10 million, and the buyer's fees was included in that. I hope so. At $10 million, you bought a $50, and of course it's worth money because of the age, for $10 million. Now, in 1913, Liberty had rare nickels, with recording shows sales reaching and exceeding $4.5 million. Only 5 of those nickels still exist right now today. Like, OMG. When I found all this out, I couldn't stop researching because I just felt the need to know more. So not only did it give me a better appreciation for coins, but just to know the history behind the coins, right? Like, I love it because we spend money. So I want to know how it was formed. And now if I leave change, I can tell them, look, this is where it came from. This is when it was established. Let's go all the way back to 1794. And you'd be surprised. Somebody may very well be interested in that, or they may very well know. So thank you for listening to my fun facts. Yay, I love fun facts. Yay, I love them. 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 Okay, now let me jump into the updates for you before we get into our amazing show. So yes, we are in the first quarter of 2026. However, things that transpired in quarter 4 of 2025, we still have to adhere to. So your estimated tax payments were due on the 15th. If you did not make those estimated tax payments, it's okay. You still have time to make them now. There is a chance that you may assess a late fee and a penalty. However, get it paid. You don't want the penalties and the entrance and the fees to outweigh the actual amount that you're paying. Okay? Now, if you haven't made a payment and you're saying, look, right now I still can't do it, maybe I'm going to just wait till next quarter. You do have that right to do so. However, keep in mind that you're going to be paying interest and penalties on that fourth quarter's payment that was supposed to be made in the first quarter. Yes, we are in tax season. So yes, I know people are inquiring about their W-2s and 1099s. Now, as I stated last week, and I'm going to keep letting you all know, companies have the right to send out your documents on or before February 2nd of 2026. It's very important if you have made any changes like moved or just got a P.O. box. Whatever situation you have, it's best that you talk to your HR or payroll department to see if they can get you your documents another secure way. Now, because the 31st falls on a Saturday, they're adhering to the next business day, which is that Monday, which is the 2nd, okay? So it's been extended. That deadline date has also been extended if you process payroll reports, which is your 940s, your 941s, your 944s, any of those payroll reports. Those are due on the 31st, but you can submit them that following business day, which is that Monday, which is going to be the 2nd, okay? Also, with all the changes that's coming about, it's so very, very, very important that you have that IRS ID Me account open. I know it's redundant. I know I keep repeating it, but the more I repeat it, the more you're going to get tired of hearing it, and you're going to say, let me sit down and take about 13 minutes to create this account. And why is it important? Because a lot of things that's happening now, you won't be able to have that access to unless you have that IRS ID Me account, because it's linked to so many other federal entities. So it's very important that you have that, okay? Whatever state that you reside in, make sure you have an online state account. As I always encourage you all, it is okay to be nosy about yourself and what is connected to your name and your social. Last but not least, if you have not booked your appointments with your accountants and your tax preparers, please do so now. Time is of the essence, because if you get in early, you're able to capture more information. You're able to find out more updates and what's going on. Just get in early. Get on the calendar. Even if you don't have your documents, have that appointment so you can have that consultation, okay? So again, I want to thank everybody for spending their time with me today on Let's Talk Finance. Yay! Please do not forget to love, share, comment, and give me feedback on the shows. If there's anything in particular that you want to talk about, if there's some information that you need, please feel free to send that information to me or also put it in the comments. We love your feedback. I hope you all have been tuning in to all the social media pages. We're putting out loads of information for you because we want you to be aware. Not that you have to be proficient, but we want you to be aware of what's going on and all the changes. So, jumping back into Let's Talk Finance, if this is your first time joining us, welcome to the family. Here on Let's Talk Finance, we break down finances with clarity, faith, and empowerment. It is so important that you understand that money just isn't about your numbers. It's about your purpose and how everything is aligned. Remember, I gave the fun fact about the Leaning Tower of Pisa. Because that foundation wasn't right, that's why it's leaning. You don't want your money to lean, right? Absolutely not. So, today's show title is From Broke to Balanced. Build money habits that last. Absolutely. So it's possible that you can go from broke to being balanced to being rich. It's possible. It's very well possible. But you want to make these money habits last. So today in this show, we're going to teach you those habits. We're going to help you be able to survive financially and have a good stability and foundation, right? That's the whole purpose of it. But before I get more into the show, you know I like to acknowledge everybody that's on. Hey, Shayna. Hey, boo. Hey, girl. Hey, sister. I love you, Benita. That's my sister, y'all. I love her. And anybody else who's watching, if I did not see your name and did not call it, thank you for tuning in. I really, truly appreciate the time spent you coming on and just learning how to get better with your finances. That's what this is about. So I got 2 questions for everyone that's listening. And you can put your questions in the comments. Tell me how you feel. Tell me if this applies to you. All of that other good stuff. So first question number 1. Are your current money habits helping you survive or helping you build? Which one? If you're surviving, that means you're going from paycheck to paycheck. You got just a little. And we can't rob Peter to pay Paul, because Peter or Paul don't got no money. And they don't even have any resources. Or the money that you have, do you have enough that it's helping you build to get more and more and more? Okay? My second question is, now, and I know a lot of people may laugh at this, but it's a true question, right? How would your financial life change if your money habits aligned with your purpose versus your pressure? Let me say that one more time. How would your financial life change if your money habits aligned with your purpose instead of your pressure? That's something to think about. And just think about it. You know, you don't have to answer it right now, but feel free to drop a comment. Let me know how you feel about that. Let me know what you're thinking. Again, this is a safe space. This is a financial safe space. This is judgment free. We can't judge nobody, period. We're all here trying to learn, trying to grow, and trying to be better. That's the whole focus and purpose. That's why we're here, right? And you're kicking it with your favorite accountant, Shavonna, that's giving you all this lovely information for no charge. Because it's not always about the dollar. I'd rather have the information because I know what to do with it and how to keep the dollar versus me having the dollar and I don't know how to keep it or make it grow. So you got to make it make sense to you. And since we're talking about it make sense to you, let's talk about what happens before the actual numbers, right? Let's talk about how that plays a role. Ask yourself, what really matters to you? Whether you're an individual or a business, an entrepreneur, a startup business, ask yourself, what actually matters to me? Which means you got to start budgeting, right? And budgeting starts with self-reflection. You can't make a budget if you don't have self-reflection. So you're in this service, you're in this industry, you're providing a service or selling a product. What does that mean? How important is it to you? Is it just to get something done now? Or is it longevity? Do you want to reap the benefits of what it is you're doing? So you have to self-reflect on what you're doing before you can do it to make it happen. Now, the ability to witness and evaluate your own cognitive and emotional behavior process. Shavonna, what do you mean? That means sit down, reset, refocus, reflect. Why are you in business? If it's just for the money, is it to help someone? What is your end goal? What is it that you're trying to do? How does your behavior play a factor in this? Will you keep going when times are hard? Will you stay there? Will you follow the course? Will you just throw in the towel and give it all up? Or will you say, you know what? Business A didn't work, so I'm going to go open up business B and see if that works. So you have to start with self. Next, you have to identify the core principles of what it is you're doing. And a lot of people you hear when they come into business, they want more income. They want to be able to retire early. They want to be able to help their family and their children. They want money to leave behind, which is great because now we're talking about generational wealth, which is not a problem. You also want that security and you want to be able to travel. But how do you do that if you have not self-reflect? So all of this plays a big part in that circle as you're self-reflecting and you're coming up with this budget. You have to make it make sense. And you say, okay, Shavonna, how do I make that make sense? I'm glad you asked. You have to set your SMART goals. You have to. And, sometimes, we got it up here in our head and it's like, okay, I remember this, what I want to do. But sometimes when you see it in writing, it just means so much more. You pay attention to it more. Your focus is more aligned with it. You want to see the end game to it. So when I say your SMART goals, you want to be specific about what it is you're doing. That's what the S is for. You want to know what must happen right now at this very minute. I need this to happen right now. So as you're doing your goals, you're being specific about what it is that you want. Now, we have to make sure it's measurable. That's what the M is for. What that means is that you need to track your process. You have to know what your percentages look like within the time span that you're trying to do it. Can you make it happen? Do you have the resources to make it happen? Next, you want to make sure it's achievable. The time set, the completion time, make sure it's realistic. So let's just say you're on a project and it takes about 18 months to get this project up and running. But you say, no, I'm going to get it done in 3 months. No, sir, that's not going to happen. You're going to go through research and development for the first 5 to 7 months. But you got to set a realistic time. You got to be realistic with yourself. That's the initial purpose of you setting these goals, right? Next, you have to be relevant. Does this goal truly matter to you? Does it align with your objectives? It has to align, because if not, that's not the right goal for what it is that you set for the business. It has to make sense. And last is time bound. You have to create that urgency. What is your deadline? So again, it's okay. Let's just say you set this project and the project's supposed to be 6 months, but you get done in 4.5 or 5. That's realistic, but you done covered all your bases. Prime example, in 2024, October of 2024, as a matter of fact, I started October 7th. I got laid off from my job October 4th. And I had been complaining that I needed to redo my whole filing system, but I just never had the time to do it. And it was so bothering me. And, my staff right now, they laugh at me until this day because I created and rebuilt my entire filing system and all of my documents that's needed for the entity. I got everything done in 6 weeks. I worked endlessly. Now, my time frame for that was about 6 months because it should have taken 6 months. But I got done in 6 weeks because it meant that much to me. I wasn't doing anything. I didn't have anywhere to go. I needed to get this done because I know time waits on no one. So what did I have to do? I made it an urgency. I was specific about what I wanted. I had to now prioritize. I had to execute my plan. And that's what I got up and did. I had a plan of action. It was to get it done. Now, was I tired? Absolutely. Did it pay off? Absolutely, because I love my filing system. I love going to my company binders and saying, here it is, here it is. How is it that I'm not organized? I had a really big issue with that. So that's what happened. And in business, even as individuals, we have to do this for ourselves. We have to make sure that we prioritize what needs to be prioritized. So now that you're aware of what takes place before the numbers actually hit, do understand that awareness creates intention. Because now that you're aware of what's going on, you're going to be more intentional of how to keep it that way. Prime example, my filing system. When I get a new client, instead of me just putting it in the folder, locking it in the cabinet, and coming back the next day, absolutely not. I set aside an hour and a half after each shift, and I go through all my documents and make sure everything is accurate, and then I file it because I love the filing system that I have, and I will not mess that up at all. No way. So now that we know what happens before the numbers, it's time to now know what the numbers actually mean. Know your numbers, which means you got to track your spending. What do you mean, Shavonna? You got to track every dollar. I always say everything starts and ends with a transaction. Look at your spending because it is transactions. Track it. No, you're supposed to know where every dime went. You have to be accountable for your finances. If not, if you're in conversation or just sitting there thinking, man, what did I do with that money? You never want to be like that. You want to know where your funds is going. And how do you do that? You calculate all of your income, meaning you can have income from a job that issues you a W-2. You can be a contractor, or you could have companies issuing you not W-2s, W-2s and 1099s, depending on the type of work that you're doing. What if you're retired? That's retirement income. What if you're not working and you're collecting unemployment? That's also a source of income. Whatever source of income that you have to calculate all of your income. And to do so, you can have a guide. Pull out last year's tax return. Of course, it's going to be different because of the amounts, but the line items are not going to change, right? So if you review your tax return, line number 9 is your total amount of income. So if you remember back in July, when I talked about your 1040 form, pages 1 and 2, is that portion of income from line 1A all the way down to 7. That's going to be your total amount of income that you receive from all sources, period. That's including alimony, any type of additional earnings that you have, whether it's prizes, winnings, gamblings, any source of income that you have, it's going to go on number 9. Now, a lot of people earn more money than they realize because, again, I think we've become so accustomed to just looking at if our direct deposit hit. We don't look at our check. We say, okay, I got to pay this bill. I got to pay that bill. And then you just automatically go and pay it, or it automatically comes out. So you don't see it. That's why it's best to have it written down. It's very important to have that written down so you can know where your funds are going. You want to be able to see it. I'm old school. I used to laugh at my mom. Every month, she used to pull out a sheet of paper, write down all her bills, go to her checkbook, put it in her checkbook, then reconcile her checkbook. I can recall the time she called me and this lady was off no more than $2, and she was so upset she couldn't balance. And I didn't understand the importance of it until I got into the field of accounting. Yes, you want to balance down to the very penny because she needed to know where her money was, just like all of us need to know where our money is at. Ask yourself, where is my money? Am I spending it the way I'm supposed to be spending it? These are questions you can sit down and talk to your preparer about or your accountant, because again, this is a trusted individual and they're in this world of finance and they're here to help you. We're just not here for tax time because, as you see, a lot happens before tax time. In doing so, you need to list all of your expenses. What are you paying? Whether you pay it once a month, whether you pay it a quarter, or whether you just went out and purchased something and now you have to make payments on it. That's an added additional expense. Write that down because that's money that you're spending. That's a debit that's coming out of your account. So that's a debit to expenses. That means it's taking out money. Now, because you're aware of what's going on, you're going to be more intentional of how you spend your money when you receive your money, because now things are being a little bit more clear. And why? A, you know your purpose. B, you created those SMART goals. C, you're tracking everything, and you know all of your sources of income. So now that we know all of your sources of income, what do you want to do now? You want to allocate that with intention. Moving with a purpose, right? It's water time. Okay. You want it to have a purpose. You don't want it just to linger and sit there. That's not the purpose. You want it to be residual. You want it to grow. Because think of it. Who wants to work the rest of their life? I'm sure if I was to ask 5 people, how many people would retire today if they could? They would raise both their arms, sit down, and raise their legs. They would do it all because they would want to retire today. How do we do that? Okay, there's a rule that's out. It's called the 50-30-20 rule. And it goes like this. You're supposed to allocate 50% of your income to your needs and essentials, which is rent, mortgage, utilities, phone. Those are your needs and your essentials. Toiletries, those are your needs and your essentials. 20% of that money is supposed to go to your savings and your debt. So if you have a debt outstanding, you put something toward that debt, and then you put something up in your savings. Because now you're saving for that rainy day if it ever comes. And 30% of your income goes to your wants and your hobbies. Now, that's the 50-30-20 rule. However, I want to take that rule and I want to upgrade that rule. And I want to call it faith plus reality-based budgeting. Because we got to have faith that it's going to work. We also got to live in reality, and we got to budget, and we got to make sure that it makes sense, right? Absolutely. So let's change that 50-30-20 rule. And here's just an example that I put out. 45% of your income goes to all your needs, whether rent, toiletries, whatever. You need it, so you have to put towards it. So that's 45%. 10% goes to your tithing, your offering, your donations. 15% of that goes towards your wants. You don't need it, you just want it. I don't want that pair of red. I don't need that pair of red bottoms, but I want it. So I'm going to make sure I got the money for it. You see the difference? I need to pay my rent, because if I don't pay my rent, I'm going to be outside. You see the difference? So we're going to allocate 15% of that to our wants. We're going to allocate that same 20% to our savings and debt. And then we're going to take 10% of our earnings and use that as a last resort for whatever it is. Maybe someone needs to borrow some money. Maybe you're helping a friend or a family member. Maybe there was a tragedy that happened and you want to be a part of that movement to assist financially. Whatever the situation is, you could change that rule so it could help you align with your finances. Therefore, you won't have to question, what happened to my money? So with that, prioritizing and sacrificing for a bigger wow. Like on the movie The Accountant, the young lady, he asked her, why did you just spend so much money on this dress? Was it really all that? And her response was, no, I just wanted people to say, wow. And now you can say, wow, as you look at your finances and look at how they've improved. Because guess what? You're moving forward. You're making sacrifices. You're prioritizing. You're weeding out the wants and just because everybody else got it. You're eliminating that and you're seeing the bigger picture. So every step counts, right? Every step. I encourage you to celebrate the small wins and the big wins. Guess what? if you said this month you was going to start saving, let's say you said you was going to start saving $25 a month, right? And January 31st, you've only saved $14. Guess what? Celebrate. Because as my mother would say, that's $14 that you didn't have. Celebrate. Because there was a time before this month you weren't even able to save that. So celebrate. You got to look at the bigger wow. Okay? Now, let's jump into systems over stress. A lot of times we stress about a lot of things. And I know it's easier said than done because I'm one that overthinks. My auntie Tootie calls me analytical because I'll overthink a situation. I'll try to find plan 1, 2, 3, 4, 5, 6, 7, and 8 because it has to make sense. It has to align with what it is that I'm trying to do. It has to have a purpose. And guess what? We're in this digital world now. And I'm getting accustomed to this digital world no matter how I feel about it. Do I still keep my hard copies of everything? Absolutely. Do I still use pencil and paper? Absolutely. As a matter of fact, I called one of my good friends, Nicole, and I asked her to join me because I needed some assistance with the big project that I'm working on. And she's so humble, and she said, you know what, friend, I love you. I'll be there to help you. But as you know, I'm not like you. I'm not writing nothing down. What program are we using to do this? Because I'm a tech person. I'm not finna go the long way. And I understood that because that's her method. And sometimes we gotta push that my way aside and learn another way. That don't mean you have to discontinue what you know, but here's a backup plan. And we laughed at that, and she told me, you know, Shavonna, you're one of the good ones because, Lord forbid, if all the systems crash, if the programs go down, it's going to take me some time to find out. But I wouldn't even stress over it. I'll just call you because you're so used to doing it by pencil and paper. And that's where we differ at, but we also can come together and work together. And that's how I want you to come together and align with your finances. I'll be quiet, Benita. Don't agree with Aunt Tootie. I am not analytical. I just look at things from an octagon's perspective. So, because we're in this digital world, we can try using automation, which means you want money to go into your savings. You can start at your job where you have your direct deposit. Have a certain amount to go to your primary checking, have that other portion go towards your savings. It's like you don't see it. Pretend like a 401k, because that's not taxable, right? It's not. You don't see that 5 to 8 to 10%. You don't see it gone because that's not what you're looking for. You're looking for everything else outside of what you don't see. So set up automatic transfers so you don't see it, like it automatically comes out. And guess what? If you need to revert back to it and go to it, you can, because it'll be there. Direct deposit stuff into a checking or a savings account that you don't want to touch. There was a time I wanted to save money, and guess what I did? I went to a bank that was difficult to get to, maybe 3 hours away. And when I got the debit card, I cut it up because I know I wasn't going to go to that bank. So that money was just going to sit there. It was going to sit there. And it did because I wasn't going. And I cut up the debit card. And you know what? They send out debit cards every 2 to 4 years. Yeah, no, that money sat there. So you can use that to help you. Now, you also want to track your weekly spending. Check in on your weekly spending. Is this something that you need to get every week? Can you condense that and buy it in bulk where it lasts you? Now, here's another example. My friends, and oh my gosh, my mom used to always talk about me because when I go shopping, you would think I'm shopping for a house of 15 people. It's just me. Nobody else, just me. However, I got it. Another example to that is when COVID came, they were limited people to how many packs of tissue, how many packs of paper towels, how many dish detergents, or even soaps that you can buy. It was a limit of 2 or maybe 3, depending on the stores. And when I went into the stores, it was like, oh my God, the shelves are empty. Do these people not buy soap on a regular? Like, I'm confused. But because I buy in bulk, it didn't make sense to me. But now it makes sense to someone else. So now they purchase in bulk. Go get it. So now when next week comes, you don't have to go buy no dish detergent. You can save it because you got some at home. Okay? It's really, really good to do that. List your income and expenses for a week. If looking at it for a 30-day time span, is overwhelming, start with 7 days. Got a question. Amen. You are such an amazing person. May God continue to bless you. Oh, thank you, Miss Johnson. I appreciate that. Thank you so much. You see how Let's Talk Finance helps people? It's the smallest little things. Oh, thank you so much. Oh, you just warmed my heart. Oh, thank you. Sorry, but getting back into that, if that 30-day time span is too long for you, set it at 7 days, from Sunday to Saturday or Monday to Monday, however you want to do it, and just look at the income that you made and look at what you expensed out, and then ask yourself: is this a want, a need, a savings, or a debt? Which one is it? Did I have to spend this? Could I have went without it? Because again, you want to see your money build. You don't want to get it in your hand and it's poof, gone. Right? Right. Now, your essentials are important. Get your essentials. It's very important. Do not neglect your essentials because you want a pair of red bottoms. No. Save up for the red bottoms. Get the essentials. Sometimes I know that a lot of us, we suffer with mindless and regretted spending. Shavonna, what do you mean by that? Well, let's just say you're in your feelings and you upset and now you're out and you're shopping. You know you don't really have the funds for it, but because you're feeling some type of way, now you're out here making mindless decisions. You're just spending money just because. It's not necessary. And now, a week later, a bill is due. God forbid if your account is overdrawn, now you regret the fact that you spent the money that you spent when you didn't have to do it. So we have to be more intentional about our funds and what we're doing with our funds so it can make sense. We have to make it make sense for us. It has to work for us, because if it doesn't work, we stand there and we look sad and confused and we don't understand. And now we're trying to place the blame on someone else. Now, we also do pleasure spending. Well, what do you mean, Shavonna? Well, I'll use me. I love perfume and purses. I don't got no shoes, but you better believe I got a tote of purses. And to somebody else, that doesn't make sense because you're going to use your shoes more than the purse. But because I like purses, I went out there and I bought a purse. Not today, of course not. Heck no. But that was a pleasure of mine. So I spent that money to get that purse. Now, did I need to do it? We already said no. Did I regret doing it? Yeah, possibly. Did I learn from my lesson? Absolutely. And that's the end game, to learn from the lesson. If you have learned from the lesson, you are on the right path with setting that tone from being broke to balanced. You're on the right track because you learned that lesson, right? Now, after you compiled all your income and your expenses for that 1 week, and you see how you came out, when you sit down and do it next week, look at last week's and see if you saved a little more, if you spent a little more. See what it is you did. Compare. And let's say you spent more. Make the necessary adjustments that you need to make. I'm sure there's adjustments that need to be made. Make them. Let's say you didn't spend more. You spent less. which means you still have that money you didn't spend. Guess what? Throw it in that savings account or put it on that debt. Eliminate. Start doing process of elimination because now you're in your numbers. We talked about before the numbers. Now we're within the numbers. We're making the numbers make sense for us. I want you to know that it's okay to take a step back and say, you know what? I'm going to wait. This ain't for me right now. I'm going to do it this way. I'm going to try it. Try it before you close the door on it. And if it makes sense to you and if you see improvement, then stick with it. Again, I revert back to the beginning of the show when I started with do your SMART goals. Be specific, be measurable, achievable, reliable, realistic, and time-bound. Make it make sense. Okay? It's okay to do so. I want to stop right here and take a moment to acknowledge everybody that's on and that's spending their time with me, whether you're doing it now or you're going to come back and do it. I really, truly appreciate you. If you could do me one favor, hit that share button. Because again, you never know who this information can touch or reach. You never know who it's going to help. You never know who's dealing with anything within their finances, and they may not be comfortable sharing it with you. So please hit that share button. Let's make finances go viral. Again, I'm going to hurt some feelings. If we can make gossip and craziness, if we can bring awareness to that and make that go viral, we can bring our finances to the forefront and make them aware, and we can make that go viral. It's very important, okay? Thank you so much. I think I acknowledged everybody, and if I did not say your name, I'm so sorry. It did not come up on the screen. I apologize, but thank you for spending your time with me on Saturday. A Saturday at 3:15? Yes, thank you. Okay, I'm going to jump back into the show. We don't got that much time. You know I like to start on time and end on time, right? Y'all know that. So, we're going to talk about business growth and tax readiness because, again, we're in that season, right? And a lot of times when we get in that season, we talk about survival mode. And it's okay to be in survival mode, but don't stay there, right? Because you were built to be on higher levels. Rise to the top. You know what I'm saying? Make this your foundation. Shavonna, what do you mean by that? Revisit your SMART goals. Never lose focus of that. Look at your strategic plan. How does that look? Is that aligning with your purpose? Is it aligning with your goals? Is it aligning with you? That's important. What is your return of investment? Do you have one? And if not, why not? Sit down and consider on looking at your return of investment. Look at your monthly spending. Can you eliminate some things? Do you need everything that you're actually going to go get? And sometimes, no, you don't need it. You just got to want it. And so you say, I'm going to get it, because now what you're doing at that moment, you're using impulsive spending because you just got to have it. And you don't even know why. So you're spending money and you don't even need to. What you also want to do, you want to prevent IRS surprises. What's that? You know, when you file them tax returns and you have a balance due, that's a surprise to you, but it's not a surprise to them. What did you do all year long? Were you playing with your withholdings? Were you making those estimated tax payments? Is there a bill out here that you owe that you were not addressing and you just said, I'll forget about it? You may have forgotten about it, but the IRS didn't. So don't get caught with those surprises. Forecast your income. Yes. Hey, Joy. Yes. Happy Saturday, hun. Thanks for tuning in. Our topic today is from broke to balanced. Also, if you are a 1099 contractor, even if you have a job and this is just your side job and you're doing something different, Set aside between 27 and 33% of your income. Please set that aside. And the reason being is because there are no taxes being withheld. At the end of the year, you're going to want to pay into your Social Security and Medicare. No one is matching that for you because you are self-employed. So set aside those taxes. Pay your federal bill because you don't want the IRS knocking at your door. You want to ensure that you have the proper amount of withholdings. So again, if you're working 2 jobs, on that W-4, box 4C should be checked, which states that you have 2 jobs. So that job knows to withhold at the correct amount. Now, if you go in there and put 2 jobs and at the bottom still put that you got 6 withholdings, well, yeah, guess what? At the end of the year, you're going to owe because you're still playing with your withholdings. That's why it's best to get in and sit and talk with your accountant and your preparer because these are things that they can go over with you. Again, it starts before the numbers. These are documents that happen before you even start to get paid. Know your deductions. Know them. Have a list of all of your expenses. If you don't know what you can write off, I'm never going to send you to Google. Never going to do that. What I will do is tell you, go to the IRS website, or you can contact your accountant or your preparer. That's what you can do because we want to have reliable sources. This is not to say your friend or your cousin isn't a reliable source, but we want to have something to back it up, right? Now, when I say deduction, I know you say, Shavonna, what do you mean? What type of deduction? Let's talk about it. Remember, a tax deduction is an amount that taxpayers can subtract from their total gross income that determines the taxable income. So on Form 1040, lines 1 through 7, when we get to line number 9, that tallied up all your total income. I did a show on this in July. You can go back to our YouTube channel and look at that show, and it gives you a breakdown of all of that. So that's what your tax deduction is. You can subtract that amount from your gross income. Now, know your credits. Let's talk about credits. Because when you say credits, a lot of people assume that, okay, the IRS is going to give me a credit, which means they're going to give me that money back. Yes and no. Let's talk about it. Credits are a dollar for dollar reduction of the amount of income tax you owe. I'm going to stop right there because we got a question. Is there a fee for not filing when you not owe for 2 years? So they would try to assess a fee on you, but even if you don't owe money, it's still best practice to send in a 0 return. It can't be sent electronically, but you can mail in a 0 return. You always want to remain in compliance because by you not sending in anything, whatever information they have on you last, they can go off of that information and say, well, hey, based on what was submitted last, we can determine that this is the amount that you're going to owe. So you don't want that. So if you do not have a balance with them or you didn't make any income, send in that 0 return. They're going to know what that means. Good question, Joy. I like that. Very good question. Thank you. But let me explain the dollar for dollar reduction. I don't think I did that, and I'm sorry, but I wanted to acknowledge that question. That was a very good question. So what that means is, let's just say the amount of tax you owe is $2,000, but you received a tax credit for $2,000. Guess what? That $2,000 is gonna wipe out that amount that you owed of $2,000 because it hit it for dollar. Okay. Now, write-offs. Know your write-offs. This is again why it's so important to sit down with your tax preparer or your accountant. What is a write-off, Shavonna? Isn't that the same as a tax deduction? Yes and no. Let's talk about it. Now, and I talked about this again in July. Your write-off is an expense that you can subtract from your total income to determine your taxable income. So you have your total income on line 7, and on line 9, you have your taxable income. No, I'm sorry. Yes, You have your taxable income. So in order to know what the federal government can tax you on, we got to deduct your tax deductions if you have any, and we have to consider your write-offs if you have any. That's why it's best to know what sits on your tax return. And again, I encourage you, if your accountant or preparer is not going over your tax return with you and answering your questions or asking you questions, you get your documents and you go somewhere else, okay? Because you need to know what's going on with you. Keep good records. Get in the habit of keeping good records. Do year-round tax planning. Your accountant and preparers is going to love you for that. Do mid-year reviews. Do check-ins. Listen, people, I got clients that call me just to say, Shavonna, I got a letter. What does that mean? Shavonna, can we talk? Because I don't know what's going on. Shavonna, I'm going to start a new job in 6 months. What do I got to do? And I appreciate that, because now we know how to tackle their financial situation and what it is they're doing. So please get in touch with your accountant or your preparer. Them check-ins, the mid-year reviews, that mid-year or semi-year planning, that benefits you and also your tax preparer. Another thing, celebrate the milestones. No matter how big or small they are, celebrate it, because it was a time you were not doing it. So it's okay to celebrate the small wins. I have 2 things that I want you to take away from our discussion today. First things first, your budget, that's you and your budget, should reflect your values and your goals, not just your income. It should reflect you and your goals. What is my goals? Do you see it coming to the forefront? Do you see it panning out? If not, are you making the necessary adjustments? It shouldn't be just, okay, I got income coming in. What are you doing with it? Is it benefiting you? Is it helping you? These are questions you can ask yourself. The next takeaway that I want to leave you with is, when you align your money with what truly matters to you, your financial clarity and confidence will get on board and it'll follow you. It has nowhere else to go. Because why? You have set that foundation. You are now more intentional. You have clarity. Why? Because you made that appointment. You asked those questions. You were not embarrassed to ask any question, no matter what someone said. You didn't compare your situation to your friend's situation. You went and you got professional assistance. Now, awareness leads to control, and control leads to intention. I just said that, right? In so many words. Because we know what happens before the numbers, we know what happens when we are with the numbers, and now we know what happens when we're done looking at the numbers, because we've set that foundation, okay? We've made it known. We have clarity. We see things better. What's that song? I can see clearly now, the rain is gone. Joy, I know you know who made that. Don't put it in the comments. Joy know every song, every artist, everything. But in closing today, your budget isn't about restriction, right? It's about alignment. When your money follows your purpose, balance stops being a dream and then becomes your reality. So we can move from broke to balance. We can move out of that stage, because now we're going into reality, because we see it, we know it, we're moving with intention and purpose. Again, I would like to thank you all for tuning in and joining me. Please like, love, share the content. Give me feedback. If it's something you want to talk about, please let me know. We're constantly taking feedback. Believe it or not, most of the content comes from the people that call in and ask questions. Believe it or not, because they're not the only ones that need it. Somebody else is needing it. Our contact information is as follows. We're on all social media platforms under Anointed Accounting. Please follow all our social media pages. We post relevant information on there that's beneficial, and it may very well answer your questions. We also have a YouTube channel. Please subscribe to our YouTube channel. I upload these shows on that channel. That is www.youtube.com. In that search box, you're going to put Anointed Accounting, which is ANOINTEDACCOUNTING. That's going to go for that YouTube page. Again, I'm looking for 100 subscribers a day. Every single day I'm looking. So if you have not subscribed, go ahead and subscribe and follow. Our website is www.anointedaccounting.com, which is ANOINTEDACCOUNTING. Thank you all for spending your Saturday with me. I love it, and I love you all. Thank you for staying the extra 2 minutes that I kept you. And I don't know if my clock is fast, but thank you anyway. So until next time, I want you to do me a favor. I want you to stay encouraged. I want you to stay grateful. And I want you to keep walking in purpose and realize you are moving from broke and balance to moving into your reality. Until Saturday, have a great week. Love you. Deuces.